Hello and welcome to Investment Insight, your clear take on the markets. Let's get started. Okay, so let's unpack this. For today's deep dive, we're covering two topics that, on the surface, seem to operate on totally different planes.
They really do. I mean, one is dealing with physics at the atomic level, and the other is about trillions of dollars moving around the globe.
Exactly. But they both fundamentally reshape how we have to assess technological progress
Right.
and financial risk. We're going from this high-stakes, extremely advanced tech competition over semiconductors
Right.
all the way to the intricate sort of hidden plumbing of global finance. Specifically, how these quiet actions from Japan's central bank are tied directly to volatility in assets like Bitcoin.
What's really fascinating here is that the whole foundation under the markets and technology, it's visibly shifting, almost in real time.
It feels that way.
Yeah, we're moving past all the, theoretical what-ifs and into documented realities.
Yeah.
And that's forcing investors, strategists, everyone to reevaluate decades of assumptions about who holds the technological edge and, well, where the true levers of global liquidity actually are.
So let's jump into that high-stakes tech race first. The discussion around China's attempt to build its own advanced chip-making tools.
Yeah.
It's been going on for years.
Oh, for years. And it was usually dismissed, right, as impossible in the near term.
Absolutely.
Oh.
For a long time, the crucial extreme ultraviolet lithography EUV was seen as this uniquely Western monopoly. But recent, very detailed reports have confirmed a genuine breakthrough.
And that just shifts the entire narrative.
It really does. China has progressed from just, researching this equipment to actually testing an operational prototype. And to really appreciate the scale of this, we need to understand what EUV lithography even is.
Right.
Think of making a chip like using an incredibly advanced printing press. Lithography is that printing process.
Yeah.
But we're not talking about printing an image. We're printing circuits so fine they're measured in nanometers.
Billionths of a meter. It's mind-boggling. And EUV is, well, it's the ultimate stencil in that process. It uses light sources that are so energetic, so precise, they operate way outside the visible spectrum.
So that stencil analogy you used before is perfect. The complexity is controlling that ultra-powerful light.
Exactly. And the big news, the thing confirmed by reports from that Shenzhen facility, isn't just that they built a machine, it's that they successfully generated the necessary EUV light source itself.
And generating that specific light, that extreme ultraviolet light, has always been seen as the single hardest scientific and engineering hurdle.
It was the wall, and the machine to do it is massive. I mean, reports say it fills an entire factory floor.
Which just speaks to the sheer industrial scale they're operating at.
It's a huge milestone. Now, we do have to maintain some perspective here. Analysts are confirming that while they have, quote, made the light, they haven't produced working commercial-grade chips yet.
Okay.
The critical challenges that remain are things like process integration, getting that ultra-precision, and contamination control. But this moves the goalposts entirely.
So if we connect this to the bigger picture, it means the conversation for investors shifts from can they do it
Right.
to
How fast can they do it?
right. You mentioned precision. Where's the absolute choke point for them now?
The consensus view is that the primary hurdle is still advanced optics. This is where the physics gets, well, painful.
How so?
Well, when you're using light in the extreme ultraviolet spectrum, basically nothing on Earth can reflect it efficiently. You can't just use standard mirrors. You have to use these incredibly complex, defect-free, multi-layer mirrors.
Okay.
And the data shows the biggest weakness cited is replacing these systems, like the ones made by Germany's Carl Zeiss. The surface of these mirrors has to be atomically smooth.
Atomically smooth, meaning no imperfection larger than, what, a few atoms.
Exactly.
So you're trying to achieve perfection on a molecular level, but inside a machine the size of a garage. That sounds like a true industrial barrier.
It absolutely is. And this brings up a critical issue that's often overlooked, which is systems integration.
Right.
It's not enough to just have great optics. You also need perfect metrology, the science of measurement and contamination control. I mean, imagine you're trying to print a circuit line that's 10 nanometers wide.
Tiny.
Right, if a single microscopic dust particle lands on that wafer, the chip is instantly useless. The whole system, the light source, the optics, the stage moving the wafer, the vacuum, it all has to work together flawlessly.
And what's so fascinating is the paradox here. Even with all those technical issues, the prototype is classified as operational.
Which means they've integrated that complex light source into the optical path well enough to get meaningful results. They're solving problems that were thought to be impossible barriers, not just making a component.
So the battle is no longer about the theory of generating light.
No, it's about industrializing the process, solving all those complex integration problems, the alignment, keeping the entire system totally contamination-free.
You know, hearing you talk about that shrinking time gap, it reminds me of that famous statement from NVIDIA's CEO Jensen Huang a while back,
I know the one you mean.
where he suggested China was only a nanosecond behind. This achievement, it really seems to validate that idea. The gap is about time and refinement, not some unbridgeable scientific impossibility.
Precisely, and the implication for investors, for manufacturers, is huge. Semiconductor competition is no longer just about who has the best design blueprints. It's a global race over this invisible industrial base.
Precision mechanics, ultra-pure materials.
Advanced metrology, vacuum engineering, these foundational things are becoming the new geopolitical currency.
So let's talk about the fuel behind this. What really stands out in the analysis is that this wasn't just, IP theft. This was driven by extremely organized learning and human capital accumulation.
You're seeing evidence of a dedicated national strategy. That level of state coordination is absolutely telling.
How so?
Well, we've seen reports detailing how this project was reportedly enabled by engineers, particularly Chinese nationals, who had previously worked for Western leaders like ASML.
Right.
There are even anecdotal accounts of some operating under fake IDs because of the project's extreme security classification.
That is extraordinary commitment.
It is, and on top of that, analysis indicates this concerted, aggressive recruitment strategy since 2019, targeting overseas talent with huge incentives.
Signing bonuses, housing subsidies.
Guaranteed research budgets. And Huawei, which is heavily sanctioned itself, is playing this critical coordinator role, unifying the R&D across design, equipment, and manufacturing.
So this suggests China has really entered a self-replicating, self-improving learning loop.
It does, and the irony, as a lot of observers point out, is that the aggressive U.S. sanctions, while they limited short-term access, they may actually be accelerating the long-term push for full domestic independence.
Turning the sanctions from a stopper into a powerful national incentive.
Exactly. And this forces the West to pivot. I mean, if a sanctions-only defense strategy isn't enough, what's the next move? It raises a big question. Can the U.S. and its allies jump to the next paradigm and make current EUV tech obsolete?
That's this leap-ahead concept we've been tracking. For an investor, what does that actually look like?
It means moving away entirely from just perfecting existing EUV technology and exploring these non-traditional approaches. We've seen an example in the U.S. startup Substrate.
The one using X-ray lithography.
Right, based on particle accelerators. Instead of focusing light, they use controlled particle beams. And industry reports claim they've already patterned features as small as 12 nanometers with a prototype.
That is a fundamental paradigm shift. So the long-term view for investors isn't just about avoiding companies caught by sanctions.
No, it's about positioning for this structural expansion of investment in the West. You're looking at foundational sectors, ultra-pure materials firms, precision mechanics, R&D firms that benefit from these national procurement contracts.
All designed to strengthen the attack, the innovation side of the strategy.
Exactly. It's a structural shift. Industrial-based investment is now a matter of national security, strengthening both the defense of sanctions and the attack of innovation simultaneously.
Okay, let's pivot completely. That tech race, based on heavy, coordinated investment, has these massive implications for global finance. It raises the overall level of leverage and risk in the system.
It does.
Which brings us to our second big dive. How the quiet, very technical actions of the Bank of Japan are shaking up the world of volatile assets, especially Bitcoin.
And we really need to connect the dots here because the data confirms that Bitcoin, which people often see as this isolated asset, it's actually acting as a hypersensitive barometer for global liquidity.
And specifically reacting to the normalization efforts from the Bank of Japan, or BOJ.
Exactly.
We saw this relationship dramatically confirmed by the BOJ's actions in December of 2025. They raised the short-term policy rate to 0.75%.
A 3-decade high.
Yeah. And that event caused an immediate shudder across high-risk markets. It really reinforced the narrative that BOJ events shock risk assets. But to understand why, you have to understand the yen carry trade.
The YCT?
Right. Let's use the simplest analogy. For years, Japan has had near zero even negative interest rates. And that made the yen effectively the world's cheapest credit card for big leveraged traders.
And here's how it works. Traders borrow huge amounts of yen at almost 0% interest. They immediately convert it to dollars, and then they invest that money in assets with high yields.
Things like emerging market debt, high-risk U.S. tech stocks.
Or critically highly leveraged positions in Bitcoin and other cryptos. They're just profiting off that rate differential. It's like getting paid to hold the position.
It sounds like a fantastic low-cost way to lever up your investments. So what's the risk?
The risk is the exchange rate. When the BOJ raises rates, two things happen. First, the cost of borrowing the yen your credit cards, APR, it goes up. But the more critical risk is that the yen strengthens.
Ah, I see. So if the yen suddenly gets more expensive, repaying that initial yen loan, that cheap credit card, becomes way more costly than when you first took it out.
Precisely. That exchange rate risk is called the carry unwind, and it forces traders to cover their losses fast. To get the cash, they sell their most liquid, most profitable, and often most leveraged assets.
And because of its 247 liquidity and ETF integration, Bitcoin is often the first thing they sell in a mass deleveraging event.
Exactly.
Okay, so if the conventional wisdom is that a BOJ rate hike should cause a crypto collapse, why didn't that happen in December 2025? That's the paradox we need to dissect.
And it's a crucial lesson in market dynamics. The simple rate hike equals crypto collapse pattern didn't fully materialize because that hike, it was well telegraphed.
Everyone saw it coming.
Everyone saw it coming. And crucially, the BOJ didn't provide strong guidance for more aggressive hikes in the future. They were cautious.
And because that fear of immediate aggressive tightening was muted, the market reacted, well, counterintuitively.
Correct. The data shows the yen actually weakened right after the announcement. The market read the move as a slow, cautious start, not an aggressive shift. So the acute fear of the carry unwind just subsided.
And as a direct result, the deleveraging stopped. Bitcoin rebounded strongly, moving above $87,000 soon after. It was the definition of a buy the news event.
The selling had already happened in the weeks leading up to it, fueled by all the uncertainty.
Right. So this teaches the market a vital, nuanced lesson. The specific BOJ move is less important than two other factors:
the resulting yen direction and the strength of the BOJ's forward guidance. The shock is tied more to uncertainty around the currency's value than the rate itself.
So what does this all mean for investors tracking this correlation today? We can replace that simple BOJ equals crash idea with three key variables.
Okay.
Number one, BOJ's next step tone. Governor Ueda stressed judging each meeting based on incoming data. That signals a preference for gradual normalization, which limits the shock factor.
Right, no big surprises.
Number two, the yen's direction. This is the most crucial piece. If the yen weakens or stays stable, carry unwind, fears subside. But if the yen suddenly surges, mass deleveraging kicks in immediately.
Because the cost of repaying that cheap credit card just skyrockets.
And number three, ETF flows. Short-term volatility gets amplified by institutional behavior. Reports showed significant net outflows from the U.S. spot Bitcoin ETFs during that pre-hike phase.
So those institutional microflows combine with the macro-yen shock. The volume of ETF flows tells you if the big professional players are participating in the deleveraging.
And looking at the bigger financial picture, the perception that BTC must bounce for tech stocks to rise has gotten much stronger.
It really has. It's because the same pool of highly leveraged institutional capital flows across both high beta tech and crypto, especially now with the ETFs providing that seamless link.
Which raises an important question for a contrarian investor. Can a buy-the-dip strategy actually work after a sharp drop that's linked to BOJ fears?
It can, but the timing is highly conditional. A reverse strategy is only viable if that fear of the carry trade unwind goes away. And that means a few things have to happen at once.
And what are they?
First, the yen has to stay stable or keep weakening. Second, the BOJ has to maintain that measured, non-aggressive tone on future hikes. And third, maybe most importantly for the short term, those institutional ETF outflows have to slow down or reverse entirely.
And conversely, investors have to stay vigilant. If the yen sharply strengthens, or if the BOJ signals a faster tightening path than expected.
Then recent analysis suggests further sharp drops are entirely possible as that leverage unwinds rapidly and painfully across global risk markets.
So we took a deep dive into two incredibly complex areas today. In semiconductors, the race is no longer just about chip design, but about mastering this invisible advanced industrial infrastructure.
That complex systems integration.
Right. And in finance, we see that the quiet, technical actions of the Bank of Japan can send these massive shockwaves through the entire global leverage structure.
turning Bitcoin into a critical, high-speed indicator of global financial stability.
It's all about knowing where to look for the true bottlenecks, isn't it? Whether it's the ultra-precision optics limiting China's self-sufficiency.
Or the direction of the yen and the clarity of forward guidance that dictates global risk appetite. Remember, knowledge is most valuable when it's understood and applied.
So a final thought to leave with our listeners. Considering the successful acceleration of China's domestic EUV efforts and the urgent need for the West to maintain its edge, will we see the U.S. leap-ahead strategy pivot from supporting small, targeted startups like Substrate to funding massive, nationalized projects with the scale and funding mirroring the original space race? Don't forget to subscribe and hit that like button